Okay, good morning, everyone. Welcome. Let's call to order this hearing of the Assessment Appeals Board for December 3rd, 2018. And we'll start with a roll call.
Board Member Crow.
Present.
Board Member Curtis.
Present.
Board Member Stern.
Present.
Thank you.
Okay, we'll salute the flag now. So after we do that, if you would please remain standing if you intend to provide testimony today, and then we'll swear you in. Okay. Ready to begin.
I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Okay, great. And please remain standing if you intend to provide testimony.
I'll now place you under oath. Please raise your right arm. You and each of you do solemnly affirm that the testimony you're about to give in the matters now pending before this board will be the truth, the whole truth, and nothing but the truth. Thank you. You may now be seated.
Okay, for those who are joining us for the first time today, what we'll do first or next is go through our agenda review and hopefully pass several take action on several items all at once, and then we'll review the status of each item on the agenda to determine how things will move forward. So we'll start with Mr. Vlahakis.
Item 5, agenda review for December 3rd, 2018. The clerk of the board recommends approval of the agenda review by the Assessment Appeals Board. The agenda review consists of the following agenda items. We're going to start with items 8 through 12. It's a little bit of a breakout. Item 8, application number 16-10128 for Mason Partners, LLC, continue to January 14th, 2019, pending receipt of the original stipulation. Item 9, application number 17-11423 for Mason Partners, LLC, continue that to January 14th, 2019, pending receipt of original stipulation. Then items 10 through 12, application number 17-11424 through 17-11426, Mason Partners, LLC, denied due to lack of appearance. Item number 13, application number 16-11058, applicant Evelyn Lundeen, removed from the agenda due to the submission of a withdrawal. Item numbers 14 through 15, application numbers 17-10001 and 17-10002, applicant GB Kodiak, LLC, Ronald Peterson, denied due to lack of appearance. I'll note for the record, the applicant indicated he was going to withdraw these, but has not got that paperwork in yet, and one of his cases was reduced, which is on your stipulation calendar. On to item 18, application number 17-10826, applicant Cristolano Paul Trust, Barry P. and Yovan L. Cristolano, denied due to lack of appearance. Item number 19, application number 17-10911, applicant Globus America Incorporated, continue to January 14th, 2019, pending receipt of original stipulation. Items 20 through 34, application number 17-10941 through 17-10955, applicant Direct TV LLC, continue to January 14th, 2019, pending receipt of original stipulation. Item number 92, application number 17-11452, applicant 2013-1 IH Borrower LP, continue to January 14th, 2019, pending receipt of original stipulation. Item number 93, application number 17-11454, applicant 2014-3 IH Borrower LP, continue to January 14th, 2019, pending receipt of original stipulation. Item number 94, application number 17-11456, applicant THR California LP, continue to January 14th, 2019, pending receipt of original stipulation. That completes the agenda review. Recommended action is to approve.
Okay, thanks, Mr. Vlahakis. Are there any questions or comments from the board? Okay, so we'll look for a motion to approve the agenda review.
So moved. I'll second that motion.
Okay, moved by Mr. Curtis and seconded by Mr. Crow, and the motion carries. Let's see. Okay, we'll go next to item 6 on the agenda, public comments. This is a time for anyone to come forward to speak on an item not on our agenda today. Okay, don't see anyone coming forward, so we'll go next to board comments. Any board comments?
Nope.
Okay. So again, what we'll do now is go through the remaining items on the agenda to determine the status of each, and then we'll know how we'll move forward with the hearings today. So we'll start with item 16, application 17-10682. Applicant is Thomas Harkins. Looks like we are continued from October 8th.
Hi.
Morning.
Morning. How you guys doing? How's everyone doing?
Great. How are you?
Good, good.
Good. Could you please state your name for the record?
Sure. It's Thomas A. Harkins.
Okay, Mr. Harkins, are you prepared to move forward today?
Yes, I am. Yep.
Okay. Any idea about how long your initial presentation might take?
Haven't gone through it.
It's okay.
Perhaps 20 minutes. Is that maybe tops?
It's whatever you need.
Okay.
Just curious.
Okay, sure. About 20, maybe, hopefully.
Okay, and thank you. Let's go to the assessor. Good morning.
Good morning, Christopher Horn for the assessor's office. The assessor is also ready to move forward today with this appeal. We estimate around 20 minutes as well.
Okay.
Question to the applicant. On the application itself, you marked findings of fact. Are you still requesting those?
No, is that the recording?
Yes.
No, that's fine. I'm
Okay.
good without that. Yeah.
The assessor will be requesting findings of fact for this.
Okay. Okay, great. So, Mr. Harkins, we will come back to you as soon as we can. It'll probably be the first application that we hear today.
Great. Thank you.
And next up, item 17, application 17-10727, applicant Etzinger Aviation. Morning.
Sir, how you doing?
Great, how are you?
Good.
Could you state your name for the record, please?
Stephen Maloney, Sun Air Jets.
Okay, welcome back, Mr. Maloney.
Thank you, sir.
Are you prepared to move forward today?
I am.
Okay. And Mr. Horn?
The assessor is also ready to move forward. We'll say 20 to 30 minutes, and we will be requesting findings of fact.
Okay.
Mr. Chair?
Yeah.
The hearing has already commenced. Findings of fact cannot be requested.
That's
They're
true.
required to
I
be-
forgot about that. Okay. Thank you for the correction.
Okay. And Mr. Maloney, just any general guess on?
I don't have any new information, sir. I presented at the last hearing, so whatever the
Okay.
county needs is fine.
Okay. So we'll come back to you as soon as we can.
I'll be here.
I believe we have items 35 through 50 next. And that's applications 17-11016 through 23 and 18-10492 through 99. Applicant is Spanish Hills Country Club.
This is a large reduction, over $5 million, before your board for approval of the stipulations. These were emailed to your board, I believe, last Thursday or Friday. They're on the agenda, so you can ask any questions if you have them, and the recommended action is to approve.
Okay. Are there any questions, comments from the board?
Was there any sales of any golf courses that you use for?
We did look at sales as and not just the income of courses within the state. And based on the information that was provided by the applicant, as well as the sales, because some of the sales are public courses, some semi-private, some private. So there are adjustments that have to be taken into consideration for all of those.
Motion to approve the large value stipulation.
Second.
Okay, moved by Mr. Crowe, seconded by Mr. Curtis, and motion carries. And next, we should have item 51.
Good morning. Kent Meyer, Assessment Counseling Services, representing Mr. Bertzloff.
Morning, Mr. Meyer. Okay, so let me just, give me 1 second. So this is application 17-11147, applicant Charles Bertzloff and Mr. Meyer here. Are you prepared to move forward today?
We're requesting a continuance. The assessor has made the corrections, but our application was also a claim for refunds, so we're waiting for refunds from the auditor's office. According to the auditor, they're trying to get those processed this week.
Okay. Any comments from the assessor?
Paperwork's done, it's just a waiting game now. Mr. Clerk of the Board, what date would,
I'd say, since this is just a paperwork timing thing, let's just go out to March 4th, our latest date available, so that way, if for some reason, you intend to withdraw the second the withdrawals are verified and the refunds are done, right? So if we go out to March 4th, that'll not be a problem.
So that date is good with both parties, March 4th?
Yes, that's acceptable.
Okay.
yes, the assessor agrees to that.
Okay. Any comments, questions from the board? No. Okay, so then we will look for a motion to continue to March 6th.
Fourth.
4th.
So moved.
I'll second that motion.
Okay, moved by Mr. Curtis, seconded by Mr. Crow, and motion carries.
Thank you very much.
Thanks, Mr. Meyer. Next up, we have items 52 through 71, applications 17-11237, 238, 240, 17-11242 through 48, 18-10744 through 50, 18-10752, and 18-10754 and 55. Applicant is Macerich Oaks LLC.
This is another request for approval of a large reduction stipulation over $5 million. This was emailed to your board last week, and it's on your agenda. Should you have any questions, the recommended action is to approve.
Okay, any questions or comments from the board? Okay, we'll look for a motion to approve.
So moved.
I'll second that motion.
Okay, moved by Mr. Curtis, seconded by Mr. Crow, and motion carries. And next we have items 72 through 74, applications 17-11388, 17-11390, and 17-11392. Applicant is Golden State Enterprises, LLC.
Good morning. Jeff Kamens, agent for the applicant.
Welcome back.
Thank you.
Are you prepared to move forward today?
No, we submitted our appraisals over the weekend. Obviously, both parties, I would think, would need some time to review the matters.
Okay. And Mr. Horn?
The assessor is in receipt of the appraisals. We appreciate Mr. Kamens getting them to us. We agree that continuance is in order for proper review. Mr. Clerk of the Board?
Preferred and recommended date is January 14th, 2019. That's acceptable to the parties.
I have a scheduling conflict.
Okay. March 4th,
March 4th can work.
assessor?
March 4th works for us.
Okay. Any questions from the board?
I have none.
No.
Okay, we'll look for a motion to continue to March 4th.
So moved.
I'll second that motion.
Okay, moved by Mr. Curtis, seconded by Mr. Crow, and motion carries.
Thank you.
Thanks.
Thank you, sir.
Next, we have item 75, application 17-11400. Applicant is Oxnard Property Owner, LLC. Morning.
Good morning.
Could you please state your name for the record?
Canton Chubel Ryan LLC for the applicant.
Great, welcome back, Mr. Schubel.
Thank you.
Are you prepared to move forward?
No, we're not, Mr. Chair. We've requested some additional documentation from the applicant, or rather from the taxpayer for the appeal. So we'd like to request a continuance. Time
Okay.
to receive it.
The assessor has no objection to that. It's just a matter of the date, do you believe that a January 14th date will be sufficient in order to procure the documents, or do you believe March would be better?
I think March 4th would be better, and that way there's enough time to get it. And if it's not going to be coming, then we'll handle it administratively.
Okay, so,
The assessor has no problem with March 4th.
okay.
And are you requesting that data be given to the assessor's office within a certain time period? Or no?
Yes, you beat me to the punch. I would like a proviso that the documentation get to the assessor at least 30 days prior to March 4th.
Okay. And Mr. Schubel, is that applicant agree to that?
Yes, we do.
Okay. Any questions from the board? Okay, then we will look for a motion to continue March 4th with the condition that the applicant provides requested information 30 days or more before the hearing date.
So moved.
I will second that motion.
Okay, moved by Mr. Curtis, seconded by Mr. Crow, and motion carries.
Thank you.
Thanks. Next, items 76 through 91, applications 17-11431 through 17-11446. Applicant is Crimson California Pipeline, LP.
Good morning, Mr. Chairman, members of the board. Michael LeBeau, Bewley, Last, Laban, and Miller for the applicant Crimson Pipeline, LP.
Good morning, Mr. LeBeau. Are you prepared to move forward today?
We were prepared to move forward today. However, the appraisal report just came in from my appraiser, my expert witness. I have provided a copy to the assessor's office, and I'd like to give them an opportunity to review it in full.
Okay. Mr. Horn?
And the assessor appreciates that opportunity to review it. I believe a continuance is in order. I don't believe any additional information will be required as vacant piece of land, correct?
Nearly vacant. It's a very small steel structure warehouse and a small office building on the site. It's nearly vacant.
The appraisal looks to be sufficient. So if January or March?
Mr. Chairman, members of the board, I've been hearing the two dates in January and March. And the first one in January, I'm supposed to be in Fresno. And the March date, I'm supposed to be back in Los Angeles in front of appeals board, both dates. Is there a February date?
Let's see. We could do with appeals board 2 on February 11th. If that February 11th work?
I'm looking at it right now, Mr. Clerk. Just a moment. February 11th would work well for the applicant, and I'll double check with my appraiser. But I fully expect that the assessor's office and I will get together.
As long as the applicant and agent understand that the board members will be changing, the assessor doesn't have a problem with moving this to the other board on February 11th.
Okay. Any questions from the board?
No.
Okay, so then we'll look for motion to continue to February 11th.
So moved.
I'll second that motion.
Thank you, Mr. Chairman. Thank you, members of the board.
Okay, thank you. Moved by Mr. Curtis, seconded by Mr. Crow. Motion carries. Mr. Vlahakis, would you like to go to the
95?
validity hearings before we come back?
Correct. And yes, so item 95 is where I recommend we go next.
Okay.
And we're prepared to address this now if you'd like. It shouldn't take more than a few minutes, or we can come back to it. Ms. Dalston, you want to come forward to the podium? The clerk of the board is prepared to address this right now if you'd like, or we can come back after the value hearings, but this shouldn't take that long.
Okay, why don't we just do it right now?
All right.
So this is item 95 on the agenda, application 1810481, and the applicant is Sylvia Dalston.
Yes.
Good morning.
Good morning, Mr. Chairman. Do I give you that? Just make 6 copies, and I did.
Yes. Okay, so that's what you'd like the board to have?
Yes.
All right.
Could you please state your name for the record?
Good morning, Mr. Chairman.
Good morning.
My name is Sylvia Dalston, and
Okay.
And I'll give your board a quick overview. So this is a validity hearing. The subject assessment appeal application was filed on August 27th, 2018, in person at the clerk of the board's office. For supplemental assessments, which this is an appeal of, California State Board of Equalization's Property Tax Rule 305D requires the application to be submitted within 60 days of the assessor issuing a notice of supplemental assessment. For this appeal, that would have started on June 19th, 2017, upon the assessor issuing a notice of supplemental assessment for the November 5th, 2014 transfer. When the notice is not received, the deadline to appeal is set 60 days from receipt of the tax bill by the taxpayer if the applicant signs an affidavit of late notice swearing under penalty of perjury that they did not receive notice of assessment. In this case, while the date of the supplemental tax bill issued was not known, or at least it wasn't presented to us, the taxpayer did visit the tax collector's office on April 9th, 2018, and obtained a copy of the delinquent tax bill and received information that the supplemental assessment was previously issued. That was informed to me by staff based on their recorded notes of the interaction. It is the clerk of the board's opinion that the applicant's 60-day timeline to appeal at the latest possible time would have been extended to 60 days from April 9th, 2018 date. That's the date she came in and was given the delinquent tax bill. Because this is when, and that's because this is when county records confirm she was made aware of the assessment and had in-person discussions with county staff. This would make the absolute last deadline to appeal June 8th, 2018. If the in-person visit in April 2018 was in fact the first time the applicant became aware of the supplemental assessment. This validity hearing is scheduled at the request of the applicant to request that the Assessment Appeals Board accept her application as timely filed for the supplemental assessment. It is the clerk of the board's opinion that the board cannot accept this application as timely filed as the original deadline of August 8th, 2017 was missed, as well as the latest possible deadline of June 8th, 2018. And again, this was filed on August 27th, 2018. And this taxpayer would not be eligible to apply for prospective base value relief in 2018 because the transfer was rescinded and rolled back to the original values for verification with the assessor's office. So normally if you miss the 60 days, you can appeal for relief in the current year forward in the next 4 years. Because the transfer was reversed, there is no value to apply for prospective relief anymore. So that's why that's not an option. The following page, I have the property tax rules that I cited, and the board can take action to deny the request to accept the application as timely filed or accept the application as timely filed. Again, we're recommending denial. Attached, I have a copy of the application filed, and then her affidavit. She did sign an affidavit indicating the tax bill was received April 9th, 2018, which is the date that she was at the tax collector's office. And then just copies of the full property tax rules. So that completes the clerk's presentation.
Okay, so we just received 4 documents. One, I believe one from the clerk, which we'll call the clerk's exhibit A.
Sure.
And then are the other 3 from the applicant? There's a 1-page speed memo from Dan Goodwin.
Yeah, I believe so.
Sure if that's from the applicant.
Yes, that's from the applicant.
Okay, so we'll call that applicant's exhibit 1. So the 1-page memo from the assessor. We have a 1-page spreadsheet with some colored ranges on it that we will call applicant's exhibit 2. And then we have a packet from the applicant with about 5 or 6 pages that we'll call applicant's exhibit 3.
Mr. Chairman Stern, the assessor doesn't have that last exhibit 3.
Okay.
We weren't given a copy.
Sure.
If we could just quickly review it and see what those documents are. The first document we received was there were 6 copies of the speed memo. So I gave that back because we have that so that could be passed out.
Okay, so Did you pass the third thing out? Sorry. Does everyone have this?
It's the first thing I think we received.
This whole
Packet.
Oh, everyone's got something a little different.
Okay.
Okay. So what you did, you grouped each of the 6 documents together.
I gave you my copies as well.
Okay. So I think what happened is, this is all the same document. So each of them should get one of these. Okay, so let me recollect the documents.
To the applicant, your last comment was that you provided even your copies. So you have nothing to work off of. Okay. Mr. Clerk of the Board.
We'll get it figured out.
Yeah, we have.
If I may.
That's the one I just gave back to him.
Oh, Brendan here.
No.
Sorry.
That's trash.
Oh.
That's something else.
Thank you.
Mr. Clerk of the Board, the applicant's
Keep that to make sure to verify, because we got more than
Thank you.
All right, I think we have everything sorted out. I'll go ahead and read through each of the documents that we have for the official one, and everyone can verify they have it. First thing I'm pulling out is a assessor's notice of a notice of assessment roll change dated June 8th, 2016. Does everybody have a copy of that?
Yes.
We had to have 6 copies, so.
There should be 7 of each one.
Okay, does second letter, June 15th, 2016 letter, notice of cancellation of proposed escape assessment, everyone have that?
Mm-hmm.
Yep.
Okay. Next, notice of supplemental assessment, date of notice 3/23/15. Anybody missing that?
Got that.
Okay. Next document, speed memo, date 2/17/2015.
Okay.
All right. Next document is a spreadsheet with blue coloring across the top titled Tax 2016. Everybody have a copy of that?
Yep.
And last document I have is letter of authorization. Anyone have any additional documents besides those? Okay, I think we're all on the same page. We don't have an extra copy for the applicant. Just give her.
We can share if you need an extra copy for the applicant.
They're the. Yes, so just look for finding the back page. Give her access. All right, and to clarify, the documents just read into the record are applicant's Exhibit 1.
Okay.
I think we're all set to hear testimony from the applicant now.
My apologies.
No problem. We're all in good shape now, and just take your time and go ahead and
Okay, so
present
let me
whatever
just start. This is far out of my, I have no idea about how these things work, but I came in and I asked about a rescission, not a rescission deed, but a quit claim, and I was going to put it in my sister's name. So I asked, how does it work? And they went to the recorder's office, and will it increase my taxes? And they said, no, as long as it's between siblings, then it should be fine. And so I had no other reason to ask any further questions, and so I filed the paperwork. And I guess about 8 months later, I did get a letter confirming what I've done. And on, if you see the first item that I want to present to you is the letter of authorization. I was doing a loan modification, and so the representative needed the paperwork on my taxes. And so instead of searching through all my papers, I just went online. And when I went online, I discovered that my taxes had changed. So I immediately came and called, and then I was told what my options were to take it back like it was. And then I explained what I was told and how I went about it. Well, they informed me that I needed to get a lawyer or go to the self-help, and I did go to the self-help. I came back, and I think it was September the 8th that we actually did the filing. And then he explained to me about appealing the taxes, and I guess we came to the conclusion there's not much I could do because it had passed the time. And this is where you have the speed memo. One of the people there in the assessor's office filled out those forms and submitted them. And so I got letters after that about the rollback changes, and then I got 2 or 3 of them. One, and they seemed to have canceled each other, so I didn't really think much about it. And then me thinking that it was all over, my mortgage company had taken my mortgage by $1,000 because of the tax increase. And so as I'm explaining to them that we've done the rescission deed, they didn't much care, and that's why you have that colorful thing showing that I had to pay, I think $3,000. No, anyway, it was $1,000 more than what my normal mortgage would be. And I could not get them to change it until I got the paper from the assessor's office saying that it had not been corrected, but the actual paper of how much it is coming in the future. So you can see that didn't stop until October. So as I'm coming back and forth and trying to figure this out, I just went ahead and swallowed the $6,000 that I lost because of the increase. And so when I came to pay my taxes in April, this is when I got this other memo saying you owe, and I know I've cleared this. And so I go over to the assessor's office, and then that's when they start explaining to me how all of this, I'm still confused on how it all comes about. But it all stemmed from me asking one question at the recorder's office and getting an answer. I would never have done this if I had any clue that it would increase. So anyway, I have just been coming back and forth, trying to figure this out and getting it clear. I went to, excuse me, Mr. Hint's office, and he told me that he was going to help me. I'm sorry.
It's okay. Take your time.
I'm just beyond nervous. Thank
If you need to take a break for a minute, that's okay too. If you need to take a break for a minute, that's okay too. It's up to you.
I'm okay. I'm sorry. I'm just,
No problem.
it's overwhelming. Okay, so I went there and I had a long discussion with him, and he said he would look into it, because I personally feel that when a person comes here and have no knowledge, like myself, and they ask a question, you don't turn around and just say, well, I don't believe you, I'm going to go ask another person. You just go with what you've been told. Forgive me. Okay, so anyway, I'm here because I think just from the beginning, if I had known the correct information, none of this would have come about. So it's cost me, from getting a question answered, over $20,000 plus. And to just keep adding more to it is a big pill to swallow. And I didn't get the appeals. She did not get any mail in Las Vegas, where my sister lives. She didn't get the mail. And I finally discovered by talking to Mr. Hint, because he kept asking, was my sister in military or government agency? And I explained, no, I don't know why she didn't get it, and she still didn't get it. And all those papers that you have, the notice of supplement, she didn't get these things. Thank you. She didn't get any of those things. And so with her not having knowledge of it, it's not coming to my house, we're missing all of the things. Thank you so much. So what I'm asking is there anything we can do to take this back and work it out? She didn't get any of these, she's got nothing since this happened but what I scanned and sent to her. So we couldn't fix any of this.
Okay, so is there any other specific information that you'd like to share in terms of anything?
None that I know of, no.
Okay. So let's, are there any questions from the board to the applicant or to the clerk, just related to the process, or?
And I think the assessor has some comments as well.
Why don't we actually start with the assessor, and then we'll go to the board.
Chairman Stern, Travis Ekma with the Ventura County Assessor's Office. Hopefully the assessor can shed light regarding the timeline of events to help the board understand the validity question that's here today. Of course, we're not here to discuss the change of ownership determination that is on her appeal. But to give you a timeline of events, there was a quitclaim deed recorded in November 5th of 2014, in which we did a change of ownership. So there was a supplemental issued for that change of ownership, as well as the subsequent lien date being adjusted to the new base year for 2015-16. Later in 2015, September 18th of 2015, as the applicant noted, there was a rescission deed that was recorded restoring her ownership back into the property. And I believe some of the members on the board have been with other hearings in which talked about rescissions and how rescissions should be processed, and those aren't look back but look forward to the subsequent lien date. So we'd be updating the January 1st, 2016 lien date, not the 15-16. We wouldn't undo any supplementals on the assessment. However, erroneously, an assessment rule change got processed. And you see the applicant submitted a speed memo, and that was the beginning of the assessment rule change that was processed. And I believe that speed memo was in, and it actually has the wrong date on it. It's actually February 17th of 2016. You can see that it was signed in 2016, not 2015. And so the speed memo is indicating both to the taxpayer and the tax collector, the assessor's making changes. It doesn't tell what changes are being made, but we're making changes. Then subsequently on June 8th, there was a receipt of a notice of assessment rule change indicating that we were reducing the land values for 2015-16. And then on June 15th, it was indicated that we're canceling that change because there should not have been any reduction. And so we reestablished that. The supplemental, however, still got canceled in the system. So we had to recreate a new supplemental assessment in the system. And that new supplemental assessment, I don't have a copy of the notice of supplemental, but I can get you a copy if need be, was sent on June 19th of 2017 to put that supplemental back on file. And it went to Bill in September 19th of 2017. So the assessor, of course, there's a supplemental for a change of ownership that the applicant appears to not have timely filed for that change of ownership event. So hopefully that gives some context. We had an original quitclaim deed 1 year in 2014. We had a rescission deed the following year. The assessor erroneously began an assessment roll change process to reverse everything. However, that was incorrect, so we canceled that rollback. However, in canceling that rollback, we had to restore the supplemental file back on so that they can be billed for that proper period of time between the transfer date of November of 14 to the end of that fiscal year, which would be June of 15. So that's what the supplemental would cover, because she was technically not the title holder to the property during that period of time. So hopefully that sheds a little light. I know it's very confusing. There's a lot of moving parts here. But if there's any further questions, the assessor will gladly help answer.
So the fact that the transaction was basically null and void, doesn't that take it back to the original valuation that was on the property?
If the transaction was void, yes. However, this transaction was not void. The transaction still exists. This is just a transaction that's voidable. Just as any contract between two parties, they can decide to void the contract and restore the owners how they were previously. And so the state board's guidance to assessors regarding rescissions, as long as the parties are restored back to where they were prior to the deed, then we can restore the base year value to the previous owner on the subsequent lien date. However, if there was a court that came in and said that this transaction was a fraud transaction and it should be voided from the get-go, then yes, then we'd go back and restore everything back to where it was, cancel any supplementals, and do any assessment rule changes that we're allowed to do under the statute of limitations. But this wasn't a voided transaction. This was a transaction that's voidable. And those are two different distinctions that they have.
I have two quick questions, unless, Mr. Curtis, go ahead.
Yeah, go ahead.
So just to clarify, Mr. Eckerman, number one, there was not a rescission deed that was recorded?
There was a rescission deed, yes, a year later in September of 2015.
Okay.
So there was a rescission deed. And so, again, the state board's guidance, if there's a rescission deed, it's not considered a change of ownership, and that we look to the subsequent lien date, which would be January 1st of 2016, to restore the base year value on the property for that following roll year. So the supplemental, as well as the 2015-16 value, would still have the increase on the base year or assessed value, because that was the ownership and the known facts at that time that that roll was closed. So we did restore.
So it has since been restored to
Yes.
the prior?
Yeah, from 2016-17 forward, her base year has been restored back to the property.
Oh.
And again, I don't want to get too much into the, because you're here to decide the validity of her case,
Right.
not necessarily the facts of the change of ownership determination. So I just want to be cautious, but I think in understanding the context of the situation and the timing will help the board make its determination.
Okay. And then my other question was, so the reason why we are here is to consider whether or not the board will elect to restore the validity of the application. So if the board did do that, what's your understanding of the effect of that?
For the effect, then the applicant would have the opportunity to challenge whether a change of ownership occurred upon the transfer to her sister in November of 2014.
It's the only thing that's being
Yes.
appealed is the change of ownership?
That's the, well, unless she has challenges to the valuation that we established on the property for that date, that would also be an eligible opportunity to file an appeal on.
Okay.
But it would only affect the supplemental filing. So.
Okay. Mr. Curtis, any questions?
When's the base year?
For which event? For reestablishing the applicant's base year or the kind of the interim base year that we had on the property?
The first one.
Let me see here. It was 2001, 2002.
Oh, okay.
So 2001 base year. There was a full transfer on October 24th of 2000.
Okay. And who was on title before November 2014?
It was the applicant, Sylvia Reese Dalston.
Sure. And who's on title?
She's on title now again.
Okay. All right.
Okay. And Mr. Vlahakis, do you have anything to add in terms of clarification related to if the board were to validate the application?
No, I don't believe so. I think the assessor addressed it properly. If you accepted the application as timely filed, the hearing would address the supplemental and the November 2014 transfer, and if that should be reversed or not. Okay. And like I said, the reason we can't have a 2018 prospective base year value appeal is because, as the assessor indicated, it's been rolled back to the old base value already for 2018, so that is not an option.
Okay, thank you. Ms. Alston, do you have any other additional comments that you'd like to make or more information for us to consider?
Well, it's just as confusing. It's really confusing. But also, there was never any money transactions. None of that occurred. And it was 9 months between the time that it actually happened and me discovering that I've gotten information that wasn't correct. Mm-hmm. And in order to correct it and do what I was supposed to do to bring it back to what it was before I submitted that quick claim.
Okay, thank you. Okay, so let's, we can deliberate now if we'd like, sure. Which is fine with me. I think, in my opinion, the applicant has made an effort to try to remedy this and has spent some time on it, and so I would think that it would be acceptable to validate the application and let the process proceed, whatever that is.
I agree with the chair.
Okay. So then we'll look for a motion.
Motion is to validate the...
you would accept the application as timely filed. That's the action we're...
Okay. So we're looking for, I make a motion to accept the application as timely filed.
I'll second that motion.
Okay, so moved by Mr. Kurz, seconded by Mr. Crow, and the motion carries. So to the applicant, the application is now considered timely filed and continue the process.
Of the appeal. Thank you so very much, and I'm sorry.
Okay, thank you. All right. So we have two applications for which we'll proceed to hearings. Items 16 and 17, I believe, are the only two. Is that right, Mr. Vlahakis?
Correct.
And so we'll hear item 16 first, Thomas Harkins. But first, we'll have a recess for 5 minutes. And Mr. Harkins, come on up. Right. We'll move forward. Okay, we're back in session. It's just after 10:30, and we're hearing application number 16, or item number 16, application 17-10682, Thomas Harkins. And this is continued from October 8th, and it looks like we have the application now, and this is a,
It's a prospective.
thank you.
It's a prospective base year appeal, so it's for a July 2014 change in ownership.
Okay.
Filed in 2017. So you'll be looking at the July 2014 transfer date and the value then, but any relief will only apply to the 2017 year and forward.
Okay, and this is an owner-occupied home, and according to
Correct.
the application?
The assessor will verify burden of proof. Because it's a purchase price, the burden of proof will likely be shifting to the applicant.
Okay, so we'll start with a brief overview of the application from the assessor, and then we'll determine how to move forward.
Good morning, Mr. Chairman, Board. Rick Denham, Ventura County Assessor's Office.
Morning.
Property is a condominium located at 285 North Ventura Avenue. It's unit number 17. There's actually two presentations that will be eventually brought forward, but the first one talks about the prospective base year, and the other one is the decline in value. The decline in value is for 1/1/17, and that's $311,597. I'm sorry, and the applicant at the time of the application said $272,500. And so that will be addressed. Also, the original transfer on 7/16/14. This is what we call, and it's very important, this is a Rule 2 sale. And that is, this property was exposed to the open market. It was done by a builder and through the multiple listing. And that sales price at the time on 7/16/14 was $300,900. And that sales price was accepted by the assessor's office as the sale price. Okay. And so that's for the 7/14 transfer. And therefore, that sort of addresses briefly the burden of proof issue. When the assessor's office does accept a sale, Rule 2, it becomes the applicant's burden of proof.
Okay.
And then with the Rule 2, just to remind you, we have a new council, that there is a lot of criteria that you have to meet, very specific, and it's a little bit higher standard than a normal value dispute. And that's really the case. And because of that, the applicant will go first. Thank you.
Okay, thanks, Mr. Denham. So, Mr. Harkins, here's how we'll proceed. You'll make your presentation first, and then the assessor and the board will have a chance to ask questions about it. And then the assessor will present the case, and then you'll be able to ask them questions. Same with the board. Then there will be closing summaries. We'll start with the assessor and end with you. So whenever you're ready, if you have any information to hand out, now would be the time before you get started.
Applicant's Exhibit 1 has been passed out in the blue folder in front of you.
Oh.
Okay.
So we should all have that. Okay, go ahead whenever you're ready.
Sure. Thank you very much. This is nice to be here today, and interesting, good experience. And I just want to one small thing on the just what the assessor had mentioned about this place being on MLS. I don't believe that was the case at the time of purchase. I don't know if that's relevant to the facts or not.
Okay.
It wasn't one that they had listed that the developer was selling at the time. But okay, so I'd like to present this in. This is going to be broken down into three different. I'm mainly concerned about the base year value, and you know that. I put some figures down there on the paper. Of course, I did some calculations and stuff, and there's some differences. The three areas I'd like to look at are the comps, since that's what the assessor that's the area that they focus on, which I project based on my calculations vary from $10,900 to $38,822. The buyer's credit of $10,479, and a construction defect that the balcony required replacement, and that was approximately $7,500. Now, I don't know that that would be pertinent to this, but because the appraiser asked for it, I thought, well, just go ahead and include it just in case it is a relevant fact. Okay.
Sorry to interrupt you. Is there a specific page that we should be looking at right now? Or
well, I'm going to start up.
Okay,
Yep, okay.
Go ahead.
So I'd like to. Okay. So I'd like to start out with the. And let me just say from the. Well, okay. I'd like to start out with the property tax comparison worksheet. Everything on the left of the folder is things that were put together for today's hearing, and the things on the right are historic in nature. I did leave out some email correspondence, but if it's necessary and we have to, because I did use. Rick had a record of something that I didn't have, and I so I had to use an email for that. All right. Okay, so here's what we have here. This is filling out the sheet as best as possible. Some of these were left blank. On my appraisal, on the zoning is a condominium. They put .06. I don't know if those things are really relevant or not. All these, like the distance between subject properties, zoning. It is a residential with 3 commercial units downstairs as well. Okay, so the unit I have is adjacent to it. It overlooks an RV park. I can't see the ocean, but it's facing that direction. It's a south-facing unit. And the living area, this is public record. The appraisal was less, but that's fine. I'd just like to go with the whatever was put in and recorded. Okay, so there it is. So these are the 3 comparisons. There's the original 640, and I put 3 comparisons of larger square footage. I did not use one of them that the assessor used because there's 2 of these that were end unit. 2 of the ones that you're using were end units, and that they're kind of more of a premium. So I decided not to do that. They have some extra windows and whatnot, and a little more desirable. But I did use one of them, and that. Okay, now. The sale dates are there. They're all within the time period. The developer was selling them at the same time. And then I calculated these differentials. And I did that, if you look at the next sheet over, and this is, okay, basically I created a differential for this for comparing number 11 and 31 and 6 and 31. Those units do fall out of the 30-day the 90-day window. But however, they are later in the year, in November and December, and I thought that would give me some unbiased, not to use as comparables, but to use as a comparison to scale when scaling down from the different square footages. Okay, so I have scratches for all the things, but those are what I based it off of on that second page. They're both compared to number 31, and there's two other square foot, and I picked these because they're in the middle. They're not like at the edges or anything like that. And so those give us some good numbers. And this is what I came with up down at the bottom. The projected cost is with those in there, taking the differential amount and subtracting it off of the extra square footage from the larger units. That's the projected value to get down to 640 square feet. And that's what the projected cost is, 640 square feet. And I just want to make a note on this too, as far as there is one of the comps I have here is an outer unit. So it has some extra views going up the Ojai Valley as well. Okay, so Rick and I are using one different item, one different comp. Okay, so next I'd like to go to the, okay, and I mean, we can pull out the appraisal. I don't know if that's, or the appraisal, I don't know if that's necessary to bring up that, but it is listed for number 11. It's listed at the time of my purchase at $289,000, okay? I believe that's what it was. And that's number 11. And let me just pull that up right here. That's, the very last paper is the appraisal report identification. And if you were to go to the 4th page, the property in the far right column is the property we're talking about, $289,000. That was listed. That was listed at the same time. That's a very comparable unit and price, in my opinion. It didn't sell until later that year. It sold for $295,000 later in the year, but that's outside of the 90-day window. It sold in November. Identical unit, identical square footage, pointing towards the hillside in Ventura. It has a view of Grant Park, so on and so forth. And I actually preferred the view on that one, but for some reason I got this one. I'm not sure what I was doing, but anyways, so the buyer's credit, that's really the thing I would like to focus on. That's really what I'm trying to get out of this, is the buyer's credit. The buyer's credit, if we look on the right-hand side, your right-hand side of your folder, there's a kind of a table that looks like this. Okay. And on the back side of it, I wrote a consolidated list of credits. Behind this paper, there's proof of all these expenditures and whatnot. But these are actual credits that the seller gave to me. 1 year of HOA dues, and there's a check that shows that, and also a accounts receivable from the HOA. Closing costs, which is on the HUD-1 statement, and also there was a separate settlement statement at that time. And there was also shows on the closing statement $1,894 credit for replacement of carpets, of 2 stairs and loft and paint walls. And so these all totaled to $10,479.45. And that's really what I'm trying to get at. That's really what I'm trying to get off of the assessed value of this. Aside from the comps and everything, the comps bring this lower than that, but I'm not interested. I'm just focused on this, everything that the buyer had credited me. And I think that's what the unit probably is a good value for what it was worth at the time of purchase. So, thirdly, I like to look at the balcony. Okay, the balcony was $7,500. I don't know if that's pertinent. That was paid by, it was a developer fault, but he did not repair it, and it got repaired by the HOA. And I don't have an exact cost on that, but I was on the board at the time, and we went with a certain bid that was $7,500, and that's all I can say is that work. And I have pictures of the work that was done too. Okay, so is everything? Is everyone following me? Okay. Okay, great. Thank you.
On that last issue related to the balcony, is there something that details that?
Yeah, like I said, I don't have an exact price on that, but in the paper behind that, I have a. This is not a bill or anything, but this is just out of an email that I got. I got it. Okay, you got it. Okay, yep. It shows what the cost was from the 3 different bidders and whatnot. Okay, all right. So, okay, I'd like to shift back over to the left side. The things on the right are more historical, but there's still some relevant things. That's what I was getting for Rick for the. Okay, so there's a picture there. It just kind of shows the layout of the different units. Notice the difference. Okay, and the difference between unit number 17 and 18 on the bottom center picture, or the second picture from the left. There's extra windows. That's an end unit. It does have some shared wall below it, but on the top it doesn't. You can get another picture of it from the figure on the left, 17 and 18. Mine's 17. That's 18. That's one that Rick Denham is going to be using. I think number 18. 30 and 31 were also, or one of these was used, and those are, I don't know if those were the upper or lower units, but those are the ones directly across, and I just wanted to give some idea of what those look like. 11 was the one that was available at the time of sale, identical model, and I'm showing where it is in that picture on the right-hand side, okay. And number 9 is one that I pulled in that's not on the assessor's, that he didn't use that comp for some reason. And then 1 and 3, it shows where 1 and 3 were, which, one was also pulled in, and that was an end unit. It was a lower unit, so I kind of have it up there. But that has, if you see the picture on the left, the far left, those are extra windows. That has, I think, 3 extra windows, and there's 2 or 3 extra windows on the upper unit as well. But this is the lower unit, and it's got 3 extra windows with views up the Ojai Valley. Okay, the second page. It shows the deck. Oh, the deck that we were talking about. I'm sorry, that's where I was. Okay, so a deck shows the deck replacement that was done. It still has one of the same drain holes in the middle, but 2 other ones were put in. And And so that's a comparison with next door of what their deck looks like. And then the subfloor was also defective, but I'm not making a point about that. It was uneven. Here's the neighborhood. Catholic Charities surrounds on one side. Trailer Town is in front of my unit, and that's just the overall building. So I think that kind of covers everything. So yes, as I said, I'm really looking at. I'm going to spend some time doing this. I'm not so interested in getting, looking at these lower figures here, which range anywhere from about 10,000 up to 38,000 or something for when I did my calculations. But what I'm really interested in is just getting that buyer's credit. If I could get that off of there, I would be satisfied. That 10,479 off the original purchase.
Great. Do you have any other information?
I don't think I do. I always probably forget things, but let's see. Okay, that's
Sorry,
it. Yeah.
what was the number that you just said?
That was $10,479.
Okay. Well, if you have anything else, you'll have a chance to, if you have more information you'd like to introduce, you can do that.
Okay, great. Thank you. Appreciate it. Thanks.
Okay, so we'll go next to any questions from the assessor to the applicant based on his presentation.
Thank you, Mr. Harkins, for the wealth of information. On your property tax comparison worksheet, you have, it says my property and then sale 1, sale 2, sale 3, just to clarify for the record. Sale 1, 2, and 3 are also units within your building and or complex, correct?
Yes.
Okay.
Yes, they're all within the complex. Yes,
okay.
Those are.
And all of those are larger, and all of them sold for more than yours.
That's correct.
Which is understandable. So obviously an adjustment would need to be made for size. I'm seeing sale 1 and 3 as closing in the same month as yours. Why did you choose your unit over any of these other units that were on the market?
Can I claim the fifth?
You can,
is this self-incriminating?
Yeah, you can, but
okay.
But they're going to ask the same question as
well.
Okay.
As I said, I preferred the view facing to the hillside, and for some reason, I did actually like that view better, and that was number 11, and that was the one that was for sale at $289. The one that was not for sale, I thought, even though you couldn't see the ocean, facing the ocean would be better. At the time, I thought that. It might be more desirable for someone else, even though it wasn't more desirable for myself. That's what I was thinking.
Okay. The items that you're claiming that you would like taken off amount to approximately $10,000. Is that correct?
That's correct.
Okay. Before I peel the onion anymore, Mr. Clerk of the Board, with regards to sales and the board making a decision, as he's requesting $10,000, is that exceeding the 5% for a Rule 2?
I have not done the math. Have you done the math?
You can do that one. Answer is no. Answer is no.
Okay. I didn't want to ask and answer my own question. So right now at this point, I'm, again, before I start peeling the onion more, are we, it was my understanding if it's less than 5%, the board's not making a decision.
If the board doesn't find the value is different by a margin of 5% or more, then it doesn't change. But
Okay.
that isn't saying that based
Super.
on what presented here, the board might
exactly
interpret it differently.
That's exactly what I need you to tell the board. All right. With the cost for the repairs to the balcony deck and the help via credits to you for closing costs, why didn't you negotiate the sales price down to reflect both the work that needed to be done and also if they were going to give you X amount, why didn't you take it off the front end?
I distinctly remember having a conversation with a friend of mine, and they said offer them what they're going to, for the number 11, offer them that for the other unit, which was not on the MLS at the time, and offer them that, and so that was not on the listing at the time, and in the process of negotiation, the developer was amenable, as I think all of us here understand what happened is to get get their sale prices up because they were trying to sell this development. It had been off the market during the slump. It came on during the so I think what the answer on that is I did, and I think I got that price with the deductions, but I don't I got the price with the deductions. That's what the negotiation was. So I essentially got it for what number 11 was selling for.
Okay, based on that comment, if the price included the sales price included the adjustments and all of that was taken into consideration, why are you now asking for those adjustments to be taken into consideration again?
Okay, you mean like why am I now or just why?
Yes.
Okay, well, I went to the appraiser's office within a year after this happened, and I talked with an appraiser, gave him some paperwork and explained and gave him some of the things here in different papers though, but some of the information here, I did not hear back. So I did try to get this resolved, and if you're talking about why at this time, so I did try to get that resolved at that time. And I understand that sometimes it has to go through this process in order to get some attention, sure. I'm sure you guys are super busy. So, am I answering your question? I'm not sure I am. I'm not sure.
I get where I'm coming from is if the sales price included fixing the balcony already, then why are you requesting for a further reduction?
Oh no, the balcony was unknown. That was a manufacturer's that was a manufacturer's defect. That was unknown at the time. As we started looking around, we noticed that a repair had been done previously. The developer was on close to the 10-year window where he would no longer be responsible. So it was identified, and it took some pushing. It took over a year to kind of get that addressed. And it was not known at the time of the sale, the developer defect. To me, it wasn't known to me, but I'm sure the developer had known that the deck had leaking issues, and the tenant downstairs certainly did.
Okay.
And as I found out, yeah.
Mr. Denham will have a couple of questions for you.
Sure.
When you purchased the unit at 285 North Ventura, number 17, did you get a loan on the property?
I did.
And is this appraisal that you submitted from that loan effort?
Yes, it is.
And I note in the appraisal that they seem to be aware of some of the issues you brought up, and they also appraised it for $305,000. Is that correct?
I thought there was a range of appraisal. I
No,
didn't.
the actual bottom line I'm looking at as of 6/11/14, it says 305,000.
On what page is that? I'm sorry.
That would be on your, I'm looking at your appraisal, so it'd probably be 1, 2, 3, 4 pages in, but it's double-sided, so it's on the,
Okay.
it's the final, it's a normal place on a Fannie Mae appraisal where they put the price.
Okay.
Does it not say 305,000?
No, it says 300,900. That's what I'm seeing, but am I missing something here?
Yeah, it should be, there should be 3 comps above the number. I'm trying to show it to you here.
Okay, yes, I see, oh, I'm sorry, go ahead, would you show me that again?
Yeah.
Oh. Well, okay, I'm looking at this sheet right here, my eyes aren't that great.
Is that okay?
This is
the bottom line. The bottom line, it says
okay.
305,000, is that correct?
That's what this says in here, yes.
Yeah, as of 6/11/14. So your appraiser at the time appraised it for 305,000 for loan purposes, is that correct?
Yes.
And are you aware that we enrolled 300,900, a little bit less than that, based upon the actual, what we call Rule 2 sale price?
Yes, I'm aware that you guys use that price.
Okay, thank you.
Any other questions from the assessor? Okay. Any questions from the board to the applicant?
Is this a mixed, did you say it's a mixed-use project?
Yeah, well, there's 3. It was part of that, the original downtown project or whatever, the west. So it had 3 commercial units in the, kind of at the very bottom at street level.
Oh, okay.
Three of the 35 units. I think there were, I think it's 3 of 35 versus 3 of 32. 3 of 35 units, yes. Mm-hmm.
Okay. All right, thank you.
Sure.
Okay. I don't have any questions right now, so we'll go next to the assessor's presentation.
Thank you once again.
Am I able to respond, or do I respond to the assessor, or no? Oh, we're going to listen to his
So
presentation.
they'll make their presentation, then you can ask questions based on what they present.
Okay, sure.
After all that, they'll make a closing summary, and then you can do the same.
Okay, great. All right, thanks.
Okay, Mr. Denham, whenever you're ready.
Thank you. I'm going to address the, not the base year, but the prop, in this case, Prop 13 for 1/1/17 first. Also.
I don't think this application covers that.
Oh, it doesn't?
Let's
Oh.
look at the application.
Okay, then I just want
It
to.
does, sorry, I apologize, it does cover one.
It does cover it, right?
Yes, it does cover
I am going to do that. But before I begin, I would like you guys to turn to everyone, I'm sorry, page 5. I believe, and I may have heard this wrong, Mr. Harkins didn't think his property was on the MLS. There's a copy of the MLS of his property, which is one of the standards for Rule 2. Also, in a way, because the original builder was selling it, we're also covered that way. Rule 2 actually says if it's a builder and or MLS. In this case, it was probably both. So I just wanted to verify that. Now I'm going to ask you to turn to page 18, which is the second to the last page. And this addresses the subject property's value as of 1/1/17. All 3 of the comps used on this date are from the subject building. The first 2 are what we would call model matches. The only difference, and it is a substantial difference, is that the subject property is an interior unit. Comps 1 and 2 are on Ventura Avenue, which does have a lot of traffic, and from the get-go, if you'll notice their sale prices from the original sale date and then into this one, they sell a little bit less than the interior units. And that's kind of the primary function that I noticed. Comp number 3 is from the subject building. It is quite a bit larger, and it had a major adjustment for size, which was absolutely necessary. But the range does show that I believe it's 311 and some change. We rounded it to 312 as of 1/1/17. So that's our presentation for 1/1/17. Now I'm going to turn the rest of our presentation to my colleague.
Yeah, you're going to do the run through on the page here.
Oh, no. Got more work. Good. Come on. Go on, Charlie. Yeah. Now we go to page 3. Comp number 1 is indeed a model match to the subject property. It's also an interior unit, and so it had a much higher ending price. It did sell in the time period. Comp number, and given most weight being a model match, comps 3 and 4 are both larger units from inside the complex. I'm sorry, 2 and 3, my bad. And comp number 3 did also side to Ventura Avenue, so you'll see a large adjustment a reasonable adjustment for Traffic Street at the bottom. But by sale price and by adjusted values, the ranges do support the Rule 2 purchase price of $300,900. The next page, you'll notice that comps 1 and 2, as you can see, are interior, like the subject. But comp number 3 is, and we put it out there, it's on the avenue, and that's why it had that adjustment. So our original, as with the lender's appraisal, our appraisal supported the sales price of $300,900, the Rule 2 sales price, and that's why we are asking you to accept that as and sustain that value.
I'm going to discuss some of the attributes of the fee appraisal that Mr. Harkins was kind enough to provide. Starting on page 7, there are certain items that have been highlighted. Mr. Harkins mentioned the fact that the HOA dues were paid for a year. Also, on the lower portion, you'll see the number of units that are actually for sale, which were 16. This, when it was originally built, was intended to be a condo complex, but like Mr. Harkins said, the market took a hit and they turned them into apartments. When the market got better, they put them on the market and the builder started selling them off. On page 8, the highlighted portion at the top, it says the appraiser is not aware of any current litigation against the association. I don't know if this statement also includes the questions between the association and the builder that Mr. Harkins brought up. In the middle of the page, it talks about the condition of some of the amenities. The carpet was apparently replaced. The HOA covers the water heater. Page 9. Although the subject is located on a busy road, the actual unit is set back and does not have any additional noise or traffic impacting marketability. Mr. Denham brought up the point that the appraiser came in at $305,000 as the appraised value. On page 10, the fee appraiser used two listings. These were number 4 and number 5. These two were from the subject's complex. 1, 2, and 3 were not. As this was on, or as comparable number 5 was on the market at the time for a lower price, it's sort of stands the question that why wasn't this one chosen over the subject? And the assessor's left with the decision that Mr. Harkins wanted to participate in the market. Out of all the units available, this was the one he chose. You'll see on 11 through 14 are the photos of the unit. We get a diagram, a map of the location of the units, and on page 17 is a parcel map, and identification marks were made for the location of the subject, as well as comparables number 4 and number 5. Mr. Harkins talks about N units having more light, not being, in essence, sandwiched between neighbors. But comparable number 4 faces the avenue. And sitting back within the complex, being insulated, does make a difference. Again, out of all the units available, Mr. Harkins chose this one. And that completes our presentation.
Okay, thanks. So it's time for the applicant to ask any questions based on that presentation to the assessor.
Okay.
If you have any.
Sure, thank you. You mentioned the avenue and there being noise. I think the noise level, is that what you're referring to? Just the street.
Yes.
Okay. Would you all looking at other things around that complex? For instance, on one side there's a next door there's the Catholic Charities, which is provides food for homeless. The side I'm on has a trailer park, right in front of it, and I think the best argument could be made. But are you aware of these other things? And would that be, in your opinion, would that be more of an impact? I mean, would these other things be more of an impact? Equal? Would they kind of offset each other?
It really depends on the person who's buying. And that's the point that we're trying to make, is based on all the units and based on the attributes for each unit. You chose this one and decided to pay $300,900. Some people do not have an issue with noise, or as much of an issue with noise. Others, if you're high enough over the over street level, you're up on the second floor. Is your balcony on the second floor or third floor?
It's on the top floor, as are number 11 and as is number 11 and number 3.
Because of that, I won't say you're oblivious, but it's not as present.
Okay. Do you think there's, for some people, would they prefer to have a better view than and put up a little more street noise?
It really comes down to the person buying. Somebody might say, hey, listen, if my balcony's up on the third floor, the street noise really isn't going to be as much of an issue. If you're down at street level, then noise, not only the traffic from cars, but also the traffic from the charity location may be less than desirable to some people.
Okay. You mentioned that I don't know if this is an important point or not, but the multi-listing, it was on multi-listing. Thank you for pointing that out. I would like to know, or I would like to you to recognize, and do you recognize that was right before the sale, the date of the sale, that it was put on the MLS, sometime around 6/27 or thereabouts? Maybe that's even close to the time of the appraisal, or maybe it even is after the appraisal date.
We've got a listing date of 5/10. We've got an entry date of 6/28, and then a sale date, and then a pending date at 5/25, with a sold date of 7/16. So, I guess it really goes to it goes to you as to when did you enter into the data contract, and I think that was stated 5/27. So according to this, it said 5/10 was the entry date, and then the contract date was 5/27, which coincides with the pending date.
Okay, did you pull that right straight off the MLS, or?
Yes.
Okay, I wasn't aware of that.
Yes.
Okay, thank you. Okay, they were not advertising that one for sale. Okay. I was not really as concerned about the other year, the 2017 or 16 year. I was more concerned about the base year. But since you brought up those other ones, number 11, I would like to point out that number 11 did sell let's see here, in November, 2nd of November of 16 for $305,000, and it sold for $300,000. Okay, sorry, $300,000 in 2016. So if that's outside of the window of the thing we're looking at for the base year.
Yeah.
But I just want to point out that that's something I do.
Will you give me those dates in sequential order and amounts again?
Sure. Okay, it's on. This is on this sheet right here on the table. It starts out with Mr. Denham.
Mr. Denham, do you have this sheet? Buried in the.
And yes, I will absolutely provide those if you'll take my word for them.
I'm sure you already did. Oh, here we go. And where are you reading this?
Okay, on comparable sales. Yep. This was something initially that had, yep.
So which number?
The $305,000. I'm sorry, $300,000 sale in 2016 for number 11, which was also sold in 2014 for $295,000. And that's also listed down below as a separate entry, the third entry down. So it was sold in 21 November 2014, apartment number 11, for $295,000. That was the one that was listed at $290 or $289 at the time of my purchase. And then at the top, it sold again in 28 December 2016 for $300,000.
So the market's going up?
It was going up. It went up $5,000 over a period of almost 2 years.
Okay.
Yeah, for that, whatever that is, whatever percentage about, I don't know if that's 3% or what that would be. Yeah. Okay, so also so the market went up, but I think looking at the overall market trend of Ventura, would you agree that, and I think it will change from place to place. Here we have another unit, number 3, that sold, as you pointed out, for 200 and number 16 sold for 305,000, I believe it was, or no, that was. Let's see here. Can I calculate this real quick? Sorry. Okay, 324.5. Okay, number 16 sold for 295,000, and that was in November of 2016. So in that case, I guess you could argue that the market did not go up at all from 2014 to 2016, or that the market, I paid above the market in 2014, which would make more sense. Yeah.
Because there's not a paired sale for the second one that you referenced, I also don't know the dynamics of where that's in location to the other buildings or within the building.
Those are all facing towards the hill, towards Grant Park, over the avenue. More noise, but a much better view.
Okay.
And then also it was mentioned that the carpet was replaced. I would like to point out it was not replaced. So that was not there. And there's evidence of on the HUD one and in the settlement statement of credit for that, the carpet, the walls, and something else that they were going to replace.
So instead of lowering the sales price, they just gave you a credit.
That's the cumulative $10,479.45 credit. Yes.
Okay.
Okay, Mr. Harkins, do you have any other questions of the assessor?
No, that's fine. Thank you.
Okay. Are there any questions from the board to the assessor?
Real quick, it shows on his appraisal that there was a credit from the seller to the buyer for $5,000. Is that on their appraisal, Carol's appraisal? On the applicant's appraisal.
Yes.
Okay.
What I saw in reviewing this was the seller is also paying for the HOA dues and a year of home warranty. I did not see anything. It says there is financial assistance amount that is unknown. Seller to credit buyer a maximum $5,000 towards closing costs.
Okay. Did so if it was not listed in the MLS, is it still considered a Rule 2 sale?
Part of the 2 criteria, I'll speak to it again, is when something's purchased directly from a builder, and in this case, odd circumstance because it's a condominium, but this actually happens a lot where they close them up, rent them, and then eventually resell them. But the 2 criteria for Rule 2 that I'm aware of is directly from the builder or the MLS. In this case, we actually hit both criteria. It was on the MLS, and he did buy it from the builder.
Okay. And to the applicant, so it looks like your appraisal came in at $305,000. Were you aware of that at the time when you were applying for your loan?
I can't remember exactly what I was aware. Like I basically know that the appraisal has to come in to get and it's often will come in at the price that something sells at, and it may not be as accurate as that. But I cannot remember that coming in. I just know it hit the sale price, which was $300,000, and I can't remember back to that point, back to 2014.
So it looks like it hit above the sale price.
Yeah, that's
at
what
305, and you bought it for 301. Right?
Yeah, that's what it looks like. Yeah.
So were you told that at the time, or you don't remember?
You know, I imagine I would have looked at it, but like when I'm looking at it now, I didn't jump right to that. I was looking at something else that showed a range of prices, and that was a mistake. So I'm thinking maybe I would have looked at it, but maybe, I think maybe I would have looked at it. I think I would have. But
Were you told by your loan agent that it came in higher than what you're buying it for?
They actually sent it, the loan agent, no, they just sent me the report, and I opened it up, and I just sent that paper to escrow. I should have been probably looking at that more closely. Yeah. Maybe I did. Maybe I mean, just as well could have looked at it. I know it hit the sale price.
Sure.
I'm sure I would have noticed it. If that was, unless I mistakenly, I would have looked on here for a figure that said the sales price.
Okay.
Okay, yes.
Yeah. And to the assessor, do you normally use applicants' appraisals in your presentations?
In this case, it's body of evidence, and we often present them, yes.
Okay. Do you need to ask the appraiser's permission, this Carroll appraiser, before you use it in your presentation, or is
because the applicant provided it?
Yeah.
And it was done for loan purposes, and he was provided a copy. When he provided it to us,
you can use
yes.
it as your okay. Nothing else.
Okay. Any other questions from the board? Mr. Harkins, you have another question for the assessor?
Yes, I have a question. That was a request from the assessor's office to send the appraisal, and it was something necessary. It was presented as something necessary for Prop 13 or whatever. That was the most important document. That was Mr. Denham told me that. So is that something that's heavily relied upon?
Yes. In situations where, especially with this, you purchase the subject and you get financing. What this is this is a third party taking a look at this and saying, all right, my opinion of value is whatever.
Okay, I would argue against it being independent. I think that it's been shown that it kind of comes in around the sale price, whatever it is.
And I can see your point, but the counterpoint to that is you benefit from the appraisal coming in at $305,000. If it had come in at, we'll say, $275,000, you would have been, the bank would have loaned only based on that amount, and you would have been expected to cover the rest.
Okay.
Okay. Any other questions?
I don't want to tie up the whole day. I mean, I was kind of curious. You had the assessor had mentioned that in the appraisal, it showed in there the credits from the seller. But is that true? Those are in there?
Yes, there's a line on what would be page 1 of the appraisal, page 7 in the assessor's presentation. There's a comment that says there's financial assistant that is unknown, seller to credit buyer a maximum of $5,000.
Okay.
That was a disclosure statement on part of the appraiser.
But not necessarily including the appraisal price, since there was no exact dollar value.
Yeah, well, the appraiser came in at $305,000 as the value.
Without any of the seller's credit or any of the other sellers
he
factored in.
That's the business portion of pluses and minuses. Okay. He's just coming up with the value for the property.
Okay.
Okay. Any other questions? Okay, so we'll go to closing summaries. We'll start with the assessor and then end with the applicant.
We appreciate Mr. Harkins being here and providing the information that he did. It was a realty sale. We accepted the sales price. We believe any other properties that were available at the time were available to Mr. Harkins. He chose this one. He paid $300,900 for the property. We enrolled that, and we believe that number should stand. Thank you.
Okay, thanks. And any final comments, Mr. Harkins?
Sure. Yes, I think that the credits to the seller were not factored into the appraisal, and also the appraisal is not an official, the one that's done by the bank is not an official one. I would expect that the one from the county, that they would go more with that, whatever the official or sale price was. Maybe okay, but the refunds were, the credits were not factored in, and that's kind of what I'm looking for. If that puts me under the 5%, well, then I would request that the appeals board would look at the comparables for sales, and and also factor in that there was a construction defect that was paid for by the developer with $7,500, and so I think the fact that these units even a couple years later were selling at the same price is kind of indicative of that. That's it.
Okay. Thank you. I had one more question for the assessor before we close the public hearing. And Mr. Horn, is it your opinion that the board does not have the authority to come up with a sale price that's different from the assessed value if that change is less than 5%? When I say sale price, what I mean is assessed value.
Assessed value. Yes. If you decide to make an adjustment and that adjustment is less than 5%, then the adjustment shouldn't be made.
Shouldn't or couldn't?
I believe that's a question for council.
Well, you said
Yeah.
two different things. Number one, you said that we couldn't do it.
Well,
to begin with, and I don't think that that's correct.
No. The board is allowed to rule on changing a value.
Okay. I just want to clarify.
Yes.
Okay.
We understand.
So long as it exceeds, so if it's under 5%, we can't change it. So you could say it's.
I don't believe that that's correct, but we'd have to review.
Do you have property? I'll pull it up. Property tax rule 2 is the guiding.
We can clarify it in our deliberations.
Okay.
Yeah, we can get council's.
Yeah.
Okay.
Okay. Thanks. Okay, so we'll close the hearing to public testimony, and we'll be deliberating later today in closed session. So, Mr. Harkins, you can check in with the clerk regarding a decision, and then a minute order will be sent to you within a couple days, I'm sure, too, assuming that we have a decision today.
Okay, thank you very much. I appreciate it.
Thanks for your time. Thanks, Mr. Horn, Mr. Denham. Okay, so next we'll go, after we take a short recess for a few minutes, we'll go to item 17, application 17-10727, Etzinger Aviation. Okay, we're back in session. It's 11:35. We're hearing item 17 on the agenda, application 17-10727. Applicant is Etzinger Aviation LLC. And this is a hearing that the board had already started on October 8th. We heard the applicant's presentation. The assessor then requested a continuance based on information that had been introduced by the applicant, and that was granted. And so we're now at the portion of the hearing where we'll hear the assessor's presentation, unless there are any questions on procedure.
From the assessor, I would totally understand if Mr. Maloney would like to recap what he presented previously. I mean, that's up to him.
Thank you, sir. I would be delighted to do so if the board would like it. If not, I don't have any need to rehash material already presented.
Sure.
Yeah, why don't we go ahead and do it just to make sure we're all on
Okay.
have the information fresh in our minds. If you feel like you'd like to do a shorter version, fine. If not, it's up to you.
Okay. Back in October, I presented, to start with, there is a spreadsheet on the top of the packet that lists my calculations to determine the value of the aircraft in question, November 855 Sierra Alpha, which is a Gulfstream Model 3, serial number 363. On that sheet, you will see a number 550,000 marked letter A. That is the base average value from the Blue Book, which is the tool that is generally regarded as one of the industry standards for determining evaluation. That comes from, let me get back to the cover sheet, this packet here, which is the printout of the Blue Book at that as of the lien date on January 1 of 2017, which is where the $550,000 comes from. Right below that number on the spreadsheet, you can see $55,000, which is the state mandated deduction of 10%. Below those, below that number, there are a number of values, 34,000, 10,000, 12,000, 10,000 that are reasonably subjective in nature, although in this case, pretty small dollar values that are used to adjust for the times and cycles of the airplane, any damage history, and the condition of the paint and interior. Much more importantly to the question at hand here, if you go down one more number, which is to letter B, there is a number negative $1,900,000, which takes into account the upcoming overhauls that are due on the engines on that airplane, in addition to the upcoming major maintenance, which is a 72-month inspection that was due. Both of those were due in 2018, so those are prorated numbers. And if you look in your packet, there is an estimate for the cost of the engine overhauls, which is the really big number of about $1,950,000, I believe, or $1,900,000, and also then the prorated value of the cost of the engine inspection is $150,000. You add those two together, you come up with $1,900,000, and by doing so, subtracting $1,900,000 from $495,000, you come up with a very negative number of about $1,400,000. And that's why I believe that the value of this aircraft as of the lien date of January 1 of 2017 is zero.
Okay. So we'll go to questions from the assessor to the applicant first.
Mr. Clerk of the Board, the time cycle amount that you reported of 528, from where was that number derived?
That's the total time on the airplane divided by the age of the airplane, which would be, I don't think I have that calculation, but it's a 1982 model year airplane, so whatever the total hours was on the airplane divided by taking that to 2017 would be
35 years?
35 years, 34 years, so
Okay.
whatever that math was is how I got that number.
When we calculated that amount out, it was 18,000 and change in hours, and the flight logs that you provided are around 13,000. So I didn't know.
I'm sorry, you're confusing me. Is the $18,000 a value or the flight hours on the aircraft?
The flight hours. When you calculate your 528, it's 35 hours, it comes out to be 18,000 and change in flight hours, but yet the logs you provided only show 13,000 flight hours?
Okay, well, the 528 is the result of doing the math. The dollar value is the result of taking that and applying it to the Blue Book page. I don't have the hours in front of me.
Okay.
I don't, so if you have the 577, which maybe I do have. No, I just have the appeal. I don't have the original 577. So I don't think the hours are that high. That sounds way out of line. 13,000 seems to be a whole lot.
Reasonable?
Yeah, a whole lot more reasonable. So,
Okay.
you know, I mean, if you do the math backwards, I can't do it in my head, but whatever that is. And again, we're only talking about $35,000 because the value of the airplane is so different anyways. You come up with plus or minus $5,000, regardless of which number you use.
I just wanted clarification where the 528 was, and okay. As the valuation is for January 1, 2017, we would be looking at the flight logs from January 1, 2016 to December 31st, 2016.
Okay.
How many flights did this plane make?
I don't have an exact number, but I would guess probably it was flying on average outside of pilot training because it doesn't fly very much. I would say 1 or 2 flights a quarter, perhaps. And most of those would be for the owner because it was the owner's aircraft. He would take that airplane when he go back east on either business or pleasure.
But at least 51% would have to be chartered in order to get the charter exclusion.
Okay, agreed.
Okay. When was the plane retired?
It was moved to the desert for parting out in September of 2017.
Okay. Well, my next question is, I guess, falls in line. Between January 1 and the time that it was retired, you would probably say 1 or 2 flights.
Yeah, it did not fly very much. It was actually for sale during that time period, and where there was no takers at any price, we decided at that point to, and with the amount of maintenance coming due, which you can see is almost $2 million, the owner decided that enough was enough and it was time to dispose of the aircraft.
Why wasn't the plane retired prior to January 1, 2017? With everything that based on your testimony, everything was, you saw this bill that was hanging out there for 2018.
Yep.
Just rearing its ugly head. How come you didn't retire it prior to?
Because I couldn't convince the owner to do so. This was my mission in life, and I have joked with a number of people over the years that I'm not quite sure that the owner didn't look at this as one of his, as in the same light as one of his grandchildren. He loved this airplane. It was really sad to have to retire it because it was still a good working article, but the amount of money that was required, and as we got closer and closer to actually having to write that check, we finally managed to convince him to retire that airplane and put it out for scrap. So it was an emotional decision and a personal decision by the owner not to do so, in spite of all of the people that he trusts to advise him on aviation matters, such as myself and other people within our company, to get, while the getting is good, sell it. He should have sold it 5 years ago, but he didn't. He spent, all kinds of money keeping it flying, but eventually we did convince him to part it out.
Is a hush kit required on these engines?
They were required as of January 1 of either 15 or 16, when Stage 3 became mandated for all aircraft throughout the U.S. And just to revert that statement back to your previous question, we were doing our best to attempt to convince the owner not to put hush kits on the aircraft either, because it was just, he spent close to $1 million on hush kits, and it gained him nothing in value. It just allowed him to keep flying the airplane. There was no benefit to him, but he wasn't ready to sell the airplane or to part it out, as the case may be.
So in order to be able to use the plane, the hush kits had to be installed?
That is correct, sir.
Okay. And you said almost $1 million?
Yeah.
How come the hush kit value isn't, or at least a depreciated portion, in your valuation?
Because it's a government mandate. There is no value for hush kits. It simply allows the airplane to keep flying. It's like having a transmission in a car. It doesn't add value to it. It's mandatory. If you try and sell your car without one, somebody's going to subtract that value. But you can't add that to the value just because it's a government issue. It's the same thing with the ADSB that's due the end of next year, January 1 of 2020. It doesn't add value. It simply allows you to continue flying the airplane.
Okay.
If you don't have it, you would have to subtract that value, because if somebody wants to buy your airplane and continue to fly it, they're going to have to spend the money. So that's, that money is the first thing they're going to subtract off to whatever your asking price is, but you can't add that to the value. So there is no value to an FAA mandate that is going to show up anywhere in evaluation.
The plane was insured for how much?
Once it went to the desert, it was insured for $0.
And prior to going to the desert?
I'd have to go back and look. I don't remember what that number was off the top of my head.
Ballpark?
I don't know, $2-3 million, somewhere in there.
Did that insurance policy have language to cover loss of an income stream because it was a chartered plane?
No, that's not included as part of the policy.
Okay.
And also, I'm sorry, go ahead.
No.
I was going to say that keep in mind that the value for insurance has nothing to do with market value. The value for insurance is what an owner determines he wants if something bad happens to his airplane. It has nothing to do with what he could sell it for. So it's an apples and to oranges approach, if you will.
I understand your point. It's like you said, a sentimental thing.
Yeah.
How much would it cost to replace a grandchild? How much does it cost typically to charter a flight?
On that aircraft?
Yeah.
I want to say that the base rate on that airplane was pretty low for an airplane of that size, because it was a 35-year-old airplane. So somewhere between $4,500 plus or minus 10%.
Okay.
An hour.
And that's a flat rate. It doesn't depend on how many people. I'm asking.
Correct.
Because I don't know.
Yeah, it is not people dependent when we charter an aircraft. There's any number of seats on a given airplane. You can fill those seats. That's okay. By the whole airplane.
I don't think I have any questions. Mr. Escora, Ms. DePlane?
I'm sorry, just for clarification purposes, because I'm also not aware of the prices that are charged to charter a plane of this type. And I'm sorry, I apologize. Efren Escora with the Assessor's Office. So when you say $4,500 per hour, you mean just a flight time, or like if we go to Vegas for 2 days, you charge only for the flight time, obviously, right? Is that,
Well, there would also be, usually the way the industry works is there's a minimum charge of anywhere from 2 to 3, 4, or 5 hours per day. So if you want to take all your friends and go to Vegas on Friday and come back on Saturday and have a good time Friday night, you're going to pay for 4 hours probably. In this airplane, it would be 4 hours of flight time, even though the flight time might only be an hour and a half. Okay. So it's just the way the industry works, because it needs to be, there's a certain amount of effort in moving an airplane that requires a minimum amount of revenue per flight, or per day rather, sorry.
And this rate includes the, I guess, all the services, right? You provide the pilots and I'm assuming you also provide the service.
That's correct, yeah. Although there are a number of over and abovs that come into that too. There's excise tax that has to be collected and paid. There's, if you want catering, if you want a flight attendant, if you want any number of things, there's handling fees, there's ramp fees, all those get added into the cost of chartering an airplane.
I have no further questions.
Okay, thank you. We'll go to the assessor's presentation. Go ahead whenever you're ready.
Thank you, sir. Again, Efren Ascora with the Assessor's Office. For appeal purposes, it is a standard process that we mail a 441 letter requesting documentation to the applicant. So if you turn to page 5, you will see a copy of the 441D letter that we first mailed to the applicant, requesting documentation. And the applicant was kind enough to provide the copies of the aircraft Blue Book data and aircraft logs for September 2017. I would like to point out that this aircraft was also audited for 2017 and that's when the applicant provided copies of the aircraft logs for calendar year 2016. If you turn to Exhibit B, you can see copies of those logs when how the plane was flying throughout calendar year 2016. And we also got a copy of the Part 135 certificate and insurance documents. That's on Exhibit C. And just like it was established earlier, this aircraft was chartered over 51% of the time during calendar year 2016. If you turn to Exhibit D, you're going to see a copy of the aircraft property statement, which was...
Just give us 1 sec to make
sure.
Sure.
Sorry, yes, go ahead. Exhibit D. We all there?
Mr. Crow, you're good?
Exhibit D. Okay. David, yeah? Okay. So, so this was this is pretty much a copy of the aircraft property statement. It was timely filed in January 2017, and it was signed by the CFO of Sun Air LLC, which they are the aircraft operator. And I just, well, all aware of that. It was signed under penalty of perjury, indicating that the aircraft was in average condition. And once again, it was used in common carriage charter more than 50% of the time. We saw no indication of damage or anything wrong with the plane. Nothing was indicated there. Once again, the 2016 logs demonstrate that the aircraft was flown consistently during the calendar year 2016. It was flown during the days prior to January 17, and the plane, after Lynn date, January 1st, 2017, the plane was chartered from Camarillo Airport to Sun Valley, Idaho. Again, that's all in Exhibit B when you see the logs. Yes, this aircraft has a hush kit system. Once again, it was installed to comply with FAA noise level. And you can see that on Exhibit F. Exhibit F, pages 1 and 2. I don't know if you can, you're all there, but we can see how the hush kit cost and, in our opinion, adds value to the aircraft, because otherwise it would not be able to be chartered, it would not generate income if this hush kit wasn't included in this aircraft. The aircraft went into consignment on September 26, 17, which is 9 months past the lien date. And also the agent deducted the full cost of the future overhaul of the engines, which is due in August of 2018, was more over a year and a half after the lien date in question. Once again, the aircraft was chartered during lien date 2017. It was being used, and just based on the logs that were provided, we can see that it was chartered. It's possible it was even chartered until before it was retired. That we don't have all that history after lien date 2017, but we did have a copy of the log that Mr. Maloney provided. We were unable to see the aircraft because the aircraft is no longer here in the county, so we could not do a situs inspection. And before I jump into, well, as part of the evaluation, we just have to follow Rule 110, Federal Taxation Code 110, I'm sorry. Full cash value or fair market value means the amount of cash or its equivalent that property will bring if exposed for sale in the open market on the conditions in which neither buyer nor seller could take advantage of the exigencies of the other. Property Tax Rule 10 also talks about that tangible personal property shall be valued at the amount of cash or its equivalent for which a property would transfer to a consumer of like property. I'm gonna let Ms. Melinda DePoyen to continue with the evaluation portion of our presentation. Thanks.
Thank you.
Hello, Melinda DePoyen for the assessor.
Hi.
If you could turn to Exhibit E. What I have here doesn't look too different from what Mr. Maloney has provided.
Just give us one more second.
Absolutely.
So Exhibit E is the two-page document with the first page
yes, down
has
your
a
plane on the bottom of the
profile of the plane. Okay.
Yes, sir.
Okay.
Okay. So the Board of Equalization guides us. We are actually required. The Aircraft Blue Book is the preferred method for valuing aircraft, and so this is our first guidance. So you'll see we've also used the Aircraft Blue Book, but we've made different adjustments than Mr. Maloney has, and I'm just going to touch on some of those. The first one is just that general adjustment that's made to account for dealer incentives and reconditioning that occur. And so that's just a standard adjustment that's made from the average Aircraft Blue Book value here of $550,000. And based on what was reported on the property statement as of January 2017, the hours were 13,000 and change. And so that is actually low compared to the benchmark that Blue Book had for similar airplanes of this age That was actually a low airframe hours compared to the benchmark, and so a small adjustment upward was made. And moving down, we're making adjustments to the higher engine hours that this aircraft has. You'll see here, and each engine is noted on the right, and it's just comparing what the midlife is to where this aircraft was as of January 2017, and it's adjusting for, it applies $1 per square foot, dollar amount, and then makes that adjustment. These are what Blue Book, this is sort of automatic for Blue Book, that you are to adjust for the airframe, the engine hours, and it guides us that the hush kit is an add-on that must be accounted for. And the value, however, that the Blue Book indicated to add was $500,000. But I have added less than that because I took some additional information into account. And if you could turn it back again to Exhibit F, which Efren mentioned a little earlier, I would just like to talk a little bit about what I feel is support that this hush kit does add value that should be accounted for. This first page is an article that was published in March of 2017, and it was written by a certified aircraft appraiser, who talks about the challenges of valuing this particular aircraft with all of these issues, the running out of the engines, the new mandates required by the FAA. And so what I want to direct you to is on the second page, the highlighted area here, where he states, without a Stage 3 hush kit, all G2, G3 aircraft struggle to break $100,000 for part out value. With a Stage 3 hush kit and all maintenance up to date, which from all accounts and purposes, our maintenance was for this particular aircraft was completely up to date as of January 2017, not counting maintenance that's due 20 months out or whatever other date. So given those two things, these aircraft often trade in the $300,000 to $700,000 range. So I just feel that this is support, that there's definitely a big difference between an aircraft that did not have a hush kit, and yes, it's basic salvage value because it can't fly any longer if it doesn't have it, and that aircraft that has a hush kit. And so I felt very comfortable with the value that I added for the hush kit in the end here, and coming to an overall value for this aircraft of $451,000. And I'd like to hand it back to Efren here. Thank you.
Hi, Efren Ascora with the Assessor's Office. Yes, I wanted to refer to another exhibit, Exhibit A2, a slide before our presentation. These are just two specific copies of the flight logs. Okay, it's Exhibit A2. And what we did is we compare the additional hours flown after LIN date 2017. You know, we have copies of those logs that were provided by the applicant for both engines. And we came up with about 104 hours that were flown after LIN date 2017, after January 1st, 2017. If we go by a typical flight time of 4 hours, this probably will give us about 26 flights, you know, roughly. We don't know yet because we don't have all the logs. We just have the one that pertains to January, and then the other one, I believe is around September. Yes, September 26th. Okay, and we believe that these logs, the aircraft logs, are consistent with the aircraft property statement that was filed by the applicant, where it shows, once again, that this aircraft was being chartered over 51% of the time, was in average condition, showed no damage, no issues. The aircraft was pretty much in flying condition during these times. Otherwise, during lien date 2017, otherwise, yeah, they wouldn't be able to charter, right? So I wanted to add that to our presentation because I skipped it earlier. Thank you.
In Exhibit F, we've included case law of Fujitsu versus the Appeals Board of San Diego. In that case, there was an argument made that an action after lien date should be factored into the lien date value. The court, the appellate court, opined differently. They say the fact there is a forced sale of property at a sacrificial price after the lien date has no bearing on the property's value on lien date. Mr. Maloney's contention is that a rebuild that is scheduled for 2018 should be the determining factor for the value as of 1/1/2017. The assessor disagrees, in part because based on the logs that Mr. Maloney provided, we calculated there were 46 flights for 2016, and 35 were chartered. There was, or 35 of those were chartered. This plane was functioning at, I'm going to say average level, even though this rebuild was hanging out there. We understand that it's there, and that was the determining factor for sending this to retiring the plane, because it was a cost benefit. But prior to that, there was an income stream. And it's difficult for the assessor to apply zero value to something that, one, is being used, and two, is making money. And the Fujitsu case, even though that was about an auction that happened after lien date, the circumstances and the principles are still the same. We're taking something in the future and having to determine whether or not it shall apply to lien date, and the assessor doesn't agree. Does anybody else have anything?
We were provided with a copy of the FAA certificate when they were able to use the plane, obviously, right? Without it, they wouldn't be able to charter it. So, I believe that's consistent with the fact that the plane was, once again, airworthy, and it could be chartered. It could generate an income.
Okay, thank you. Are there any questions from the applicant to the assessor based on information in the presentation?
Yes, sir. I have a number of questions.
Before you ask, can I just interrupt you 1 second? Could you clarify, Mr. Maloney, what is the applicant's opinion of value zero?
Correct.
Okay, just want to clarify that. Go ahead.
Okay. First, in the appraisal done by the assessor's office, there is no accounting for the damage history. And I believe Mr. Escora has stated that there was no evidence of damage, but all he's looking at is flight logs and not in the aircraft logbooks, where in 2010 there is actually a 2% diminution of value for damage related to a lightning strike. Damage history does not go away in an airplane in valuation purposes, so that needs to be accounted for. So that's problem number one with the valuation as supplied by the assessor's office. Number two, the addition of value for hush kits. As I stated before, there is no addition of value for something that is an FAA-regulated, mandated item. I'll go back to my analogy of a car that is for sale. If it does not have a transmission, it's probably not going to sell. If it does have a transmission, it's just like every other car out there that's for sale. Therefore, there is no addition for adding a new transmission, an old transmission, or any transmission. It simply has to be a working article. So I believe that the addition of hush kits and a value for the hush kits is irrelevant to the argument and should be valued at zero, not $350,000. Number four, there was a reference to the hours on the engines coming up for midlife. This was not a midlife inspections, and as point of fact, these engines are on a, in this case, are on a hard calendar cycle, meaning in August of 2018, regardless of the number of hours on those engines, they were going to have to be overhauled because they were at the 20-year point, which mandates a full overhaul. Therefore, that is why I included the cost of $1,900,000 in my valuation of this aircraft. Is there is no option. If the airplane had not flown an hour from 2000 on in August of 2018, the engines would still have to be overhauled, period. There is no argument on that. It's a calendar inspection mandated by the manufacturer. Mr. Escora has talked about the hours flown, and Mr. Horn talks about the charter hours flown after the lien date. Since we are doing a market comparison approach here, we are not talking about a revenue stream approach to valuing this airplane.
I'm going to interrupt you just for 1 second. You will have a time to make a closing summary at the end, so if you have questions based on their information, this will be the time,
Okay.
and then you'll still have the ability to make a statement at the end.
I just have one question.
Okay.
In the valuation that has been done, that you came up with the $451,000 number, the assessor's office completely ignores maintenance. I'm assuming that's under the guise of the ruling, the appellate ruling that Mr. Horn stated regarding issues that occur after the lien date. Is that correct?
Yes.
Okay. Let me ask then why on more occasions than I can count, I have reached agreement with the assessor's office on valuations of other airplanes, and I do not have examples here because this is all new as we're discussing it, of other airplanes where the maintenance due, which is the exact same circumstances as we have here for overhauls on the engines, has been included in the valuation as part of the settlement process for a stipulation.
Mr. Maloney, did we offer you a stipulation?
Yes.
Did you refuse that stipulation?
I'm sorry, for this aircraft or
Yes.
the past airplanes?
No, for this aircraft.
I was offered a stipulation at the $451,000, yes.
And you determined that was unacceptable?
I did, yes.
Okay. We made our calculation, and for this plane and any settlement for any other plane, any other appeal is specific to that plane.
All right, well, I would suggest that my question is related to precedence, because in the past, the principle that we're talking about of accounting for the maintenance status of an airplane and adding or subtracting for that status has been included. My question is, why wasn't this done for this particular airplane?
Because we were able to sometimes the assessor gives a little to get a little. Our settlement, our offer to you was rejected. So these two put together a valuation and presented it today.
So there's no answer to that question per se. Your question is, or your answer is, we chose to ignore it.
No, I said we proceeded to go down a path possibly on other appeals in order to get a resolution. We weren't able to get a resolution on this one, so that's why we're here today. Ms. DuPoint will be happy to weigh on this a little bit more.
Thank you, Melinda DuPoint again for the assessor. The reason it wasn't done in this case is because these maintenance inspections weren't due around the lien date. Now, I think that might be the factor to consider in the other. I mean, not knowing which cases you're talking about and what aircraft, but on some of those, certainly if the maintenance was due around the lien date and that wasn't done, certainly it's going to be taken into consideration at that point. But in this case, they're not due until 2018, so adjustments weren't made. If I could just really quickly address what you brought up regarding the damage. Sure. I was aware of the 2010 lightning strike. I was aware that it was subsequently repaired. I am aware that in the case of two equal airplanes, one having been, had an issue 8 years ago and one hadn't, might sell for a little more. But in this case, we just know the more time that goes by, the less that is a factor. And in this case, I felt that something 8 years ago that was repaired right after it occurred, it had minimal, if any, impact on the value in this case. And the hush kit, I am following the Blue Book recommendation in adding value for the hush kit. And I'm adding less value based on my appraiser judgment than the Blue Book is indicating. But what I base that on is that market information that I was able to get. But I'm following the Revenues Taxation Code and using the Blue Book, and then I'm following the Blue Book guide in how to do the valuation. And so I hope those help to answer those issues brought up.
Okay, well, that actually brings up let me ask a question in relation to the damage then. Is damage history to be considered in the valuation of an aircraft according to the Blue Book?
That's also one for some appraiser judgment, because certainly if there was damage a year ago, might have a different impact than damage 8 years ago that was fixed 7 years ago. I think this is just judgment, in my opinion.
Okay, so it's a judgment call on your case, even though the Blue Book says it should be taken into account. Some number needs to be taken into account for damage history. Is that it? Does the Blue Book take into account damage history as part of its valuation procedure?
It does, but appraiser judgment comes into account as well.
Absolutely.
And we're talking about a very minimal adjustment.
I agree 100%, but it's still an adjustment. I just am trying to clarify that this is
yes, sir.
An appraiser judgment, not ignoring it entirely.
Well, I'll tell you, I've had discussions with other appraisers, and the feeling is that as time goes by, the damage history, especially if it's been repaired, has less and less of an impact. And so that was my judgment, not just for the lightning strike. I wasn't even clear on what Well, I think I better leave it at that, but basically that is my answer.
Okay, so you weren't clear on the lightning strike, but you chose to.
No, I just,
I don't understand that.
I felt it, the lightning strike from 2010 that had been repaired.
Did you request the
negligible
entry
value.
for that damage?
So
No, okay.
I think I'll leave it at that.
Let me rephrase my prior question for you, my one question, and I apologize for dragging this out, but my other question then becomes, when you are valuing an aircraft according to the Blue Book guide, does maintenance status factor into the valuation?
I believe Ms. DuPointe addressed that from the standpoint of how close the maintenance due date is to the valuation date. If the lien date, January 1, 2017, is your point of reference and you've got maintenance due at the end of that month, February, March, I can definitely see where that's going to be factored into it. 6, 8, 10 months, a year down the road, it can be overlooked.
It could be overlooked. Is that is that from the Blue Book, or is that just another judgment on your part, sir? And I asked that, let me be more specific then. Let me go back to this specific airplane on January 1 of 2017 and say, I'm interested in buying this airplane. What is the maintenance status? Well, there's $2 million worth of work that's due in June and August of 2018. Should that be a factor according to Blue Book, or do we just ignore that number?
That goes into the negotiations of the selling price or asking price. You know, does that person want to take in? It really depends on how much burden that person buying it wants to bear.
Okay, so this is as we have determined, and I have no argument with, the base value on this airplane is $500,000 with a $2 million bill due coming within 18 months. Do you think a willing buyer, unbiased, and a willing seller could meet an agreement on that? Why would somebody spend, let me just ask that fundamental question. Why would somebody spend $2 million to fix an airplane that's only worth $500,000?
Because once they fix those engines are going to, in essence, reset the life of the engines. Is that correct?
That is absolutely correct, but what does that do to the value?
Will it increase the value? Yes. Will they recapture the full $2 million? Probably not.
Okay. Thank you. No more questions.
Okay. Questions from the board to the assessor?
The one question I have, which I guess maybe the applicant, plane is on consignment. What is the consigned value?
To date, sir, but again, these are after the lien date of January 1 of 2017. We have collected approximately between $40,000 and $50,000 in the last 2017, about 15 months worth of parts sales since it's been consigned. So not a heck of a lot. I can't even give it away.
Any other? Okay, I have one question for the applicant and two for the assessor. So just following up on that, on Mr. Crow's question, there's obviously some value above zero at the lien date because you could sell it for parts, right? So
sure.
Sounds like you said it's been $40,000 to $50,000 that you've collected so far. Is that what would you expect on the lien date if you sold it for parts that, you know, the total is that you might collect?
That's highly speculative.
Hard to say.
Absolutely hard to say. And the fact that it has sat out there for 15 months and has only sold 40 or 50,000 worth of parts on the lien date, I don't think it would have made any difference whatsoever.
Okay.
We couldn't give it away. We couldn't sell it to somebody to part it out.
Right.
We had to essentially put it on consignment, and that was the only way we could attempt to gather any remaining value out of that aircraft.
Okay, thank you. And so to the assessor, it sounds like the Blue Book value of $550,000 is based on something that can be used. And so is that based on buying something that has, so let's see, if there's $1.9 million due in maintenance, after spending that $1.9 million, it would be worth the $550,000 mentioned in the Blue Book, right? Because that's assuming that it can be legally used.
To my knowledge, the 1.9 million wasn't.
I'm sorry, I'm a little
Maybe I'll be.
The 550 is an average. It's Blue Book's.
Okay.
This is the average cost of this aircraft, this 1982
Right.
G3. And then we're adjusting for.
So if the maintenance were due
if the maintenance
a month later,
February of 17, we might have a different story, right? But it's due in 2018.
Right.
A year and a many, I mean.
And so in 2018, whenever it's due, after that
Whenever it's
maintenance
due.
is completed and everything's in compliance, then it would be worth the Blue Book value, right?
No, it's worth the Blue Book value
Now.
now, exactly. Yes, it's worth, this is what we're saying it's worth. The Blue Book is saying this aircraft is worth 550, now adjust for if it has fewer engine hours or more engine hours, if it has, so that's.
Okay. So I guess my question, maybe I'll just restate it. So if the maintenance were due, well, let's say the maintenance was due whenever it was, July or August of 18, and it was all completed. After it's all completed, the airplane would be worth whatever the stated Blue Book value is. Is that correct?
Correct. After you take into, you would have, well, you would still have airframe hours, but your engines would be
New, and you would be adding value to this value for having brand new engines.
Would you recoup the full $2 million? No, I don't think you
Okay.
would. But you would at least, based on your question, you've got 500,000, or it's worth 500,000 on the Blue Book. After the full 2 million rebuilds on both engines, it's hard to say what the market would, because again, additional airframe hours plus the age of the aircraft, you're tacking on another year.
Okay. Thanks. And then my second question in Exhibit F, I read the highlighted sections of Exhibit F about the Fujitsu plant that closed and then the equipment. I guess there's an assertion that the equipment, by the applicant, that the equipment was worth less because it had to be sold because the plant was closed, right?
Correct.
But isn't that different than in this case where that equipment could be sold legally, but in this case, with the maintenance that's due, it would have to be performed in order to sell it, or it's not worth anything?
I said it was a similar assertion based on the fact that you had the appellant saying, however, sometime after the lien date, we sold this property. Okay? Mr. Maloney saying, sometime after the lien date, I've got to do a 2-engine rebuild that's going to cost me $2 million. He's saying because of that, that's hanging out there, then we just need to take that $2 million off and take this thing down to zero. Well, if that's the case, then if you know the $2 million rebuild's going to be hanging out there eventually, you'd make that argument every year. Oh, hey, if it was 2013, I'd be saying, well, I've got a $2 million rebuild hanging out in 5 years. You need to back that off.
Okay. So what you're saying is that if you had a plane with a Blue Book value of $550,000 and you knew that in 17 months you're going to have to pay $1.9 million to keep it flying, that you would pay $450,000 for it?
As of January 1, 2017, that was the value that we came up with.
Okay. Thank you.
Had a quick question about that Hush Kit. I haven't seen any, I was checking out eBay, no listings for Hush Kits.
Mr. Clerk of the Board, is he allowed to go on eBay and check for Hush Kits?
Redirect to cancel?
No,
I don't
sorry.
think that is permitted.
Just joking. What's the market for a used Hush Kit?
I have an answer for that if anybody.
No, I know your answer.
No, I actually have specific, it's not actually an answer, but it helps answer the question that, and the assessor obviously can chime in, but each of those Hush Kits is designed for an individual airplane based on the structure of that airplane. They're not just mass-produced, they're custom-made.
Mm-hmm.
So while you could, in fact, one of the things we spoke with the consignment gentleman where the airplane sits out in the desert now is, let's sell the Hush Kits. And number one, there's no market for it because there's only about 10 G3s still flying in parts of the world that require Hush Kits. And number two, it's basically the scrap value of the metal out there, which there is titanium in it. So it's not a lot of money, but it's by the pound, and it's not by the 700 or 900,000 or whatever the number is to be spent to put that those Hush Kits on the airplane.
Okay. And so what's the market value of a used Hush Kit?
Based on, I was going to say, based on Mr. Maloney's testimony,
Mm-hmm.
you know, it's scrap value. But in use, which is what we're talking about, the depreciated value that Ms. DePoyen put on was $350,000 because it was being utilized at that point, at that time, on that date. We're not looking at 2017 in September when this thing got sent out to the desert. We're not looking at 2018 when the major rebuilds are happening. We're looking at the plane as it's operating, as it's functioning, as of 1/1/2017.
Sure. So you're looking at the value as of the lien date of the Hush Kit. If it wasn't there, the airplane value would be zero.
Well, the airplane value would be greatly diminished because they would not be able to, because it doesn't meet FAA standards.
Mm-hmm. And they couldn't fly it.
Mm-hmm.
Okay. All right. Thank you.
Okay. Any other questions from the board to either party? Okay, then we will, Mr. Blockus, could you remind me, is the burden of proof for the applicant?
That's correct. The burden is with the applicant.
Okay, so we'll start closing summaries with the assessor, and then we'll end with the applicant.
Thank you, board members, council, clerk of the board, Mr. Maloney, for coming out today. Reason and logic dictates the valuation of the subject as of lien date, January 1, 2017. That's the date of focus. The Hush Kits allowed for not only personal use, but also charter use, and allowed for that income stream to continue. Reason and logic are elements that are present throughout the assessor's presentation. Ms. DePoyen, Mr. Escora laid out a simple process of determining the value, supported by industry documentation, revenue and taxation code, and case law. $451,000, no more, no less. Thank you.
Okay, thank you. And Mr. Maloney?
Thank you. I would come back to my prior points. I'm not going to be redundant and get into details, but number one, the damage history that was ignored by the appraiser when doing their appraisal. Number two, the logic of hush kits, which we have determined is, we respectfully disagree with the assessor's office and don't believe that a addition to the aircraft simply to allow it to meet FAA mandated standards and continue to fly has anything to do with the value of the aircraft, nor should it be included in that price. The question of the hours on the engines and how that relates to the overhaul of this aircraft is determined by, which is determined by calendar and not by hours, is another issue that is an incorrect piece of the evaluation provided by the assessor's office. Mr. Horn has stated on a couple of occasions that because it was a flying article on January 1 of 2017 and it chartered after that date, that there is value because of those charter hours and the revenue stream generated. However, the appraisal provided by the assessor is based on the market comparison approach, not on the income approach, so revenue generated by that aircraft is irrelevant to the discussion. And lastly, I would say Mr. Horn has stated that reason and logic are how the assessor has approached the valuation of his aircraft, and I would suggest that anybody that is looking to, in an arm's length transaction, to purchase an airplane worth $550,000 on January 1 of 2017, knowing that there is almost $2 million worth of maintenance coming due, less than 18 months away, reason and logic does not apply to that assumption, which is what the assessor's office is asking you to assume moving forward to determine the correct value of this aircraft. Thank you.
Okay, thank you. We'll close the hearing of public testimony. We'll be deliberating in closed session today. Thanks to both the parties for your work and your time today, as well as on October 8th when we started the hearing. And Mr. Maloney, if you'd like to check in with the clerk in terms of status, you can, and there will be a minute order sent out in a short period of time, and then we'll have, we do have findings of fact, right? That'll be, oh, not in this case. Okay. So that doesn't apply. So thanks everyone for your time. Okay. Before we go into deliberations, let's quickly go through the remaining item on the agenda, which is our...
We have non-original stipulations and then regular stipulations. So 96 would be first.
Okay, so item 96, which is actually items 97 through 99, applications 17-10776 through 78.
These are stipulations that the assessor was not able to obtain originals on after their 3 attempts. The list was much longer, but it has been narrowed down to these remaining 3. These were emailed to your board last week, and they're in your packet. Recommended action is to approve the facsimile stipulations.
Okay. Any questions from the board?
I've reviewed the stipulations, and I make a motion to approve them.
Okay, so we'll make our first motion just for items 97 through 99, which are the stipulations that have the faxed signatures. So we'll need to look for a motion for to approve those first.
Motion to approve.
Second.
Okay, so moved by Mr. Crow, seconded by Mr. Curtis, and that motion passes. And then second, under item 100, stipulations that comprise items 101 through 153. Any comments, questions from the board? If not, we'll look for a motion to approve.
Approve.
I'll second that motion.
Okay. Moved by Mr. Curtis, seconded by Mr. Crow, and motion carries. So we will adjourn and deliberate in closed session.